where you're right, all of the gold, the people in the know, the insiders, again, the information, right? It's like American football. When you're in a huddle, the offense knows the play, the defense has to react to it. So it's much easier for the offense in theory because they know the play. And that's exactly what all of Roosevelt's buddies did. Oh, you just happen to send all your gold by steamship to Switzerland and Liechtenstein and the UK and all of these places into banks, into safe deposit boxes just for the hell of it. And it just happened to be a month before gold was confiscated. Yeah, right. And it's the same thing here. So you just happen to be importing all of this gold and silver as the price keeps going, but slow enough to not cause any attention. Like, where's the mainstream? Where are they?
Monaco 64, home of alternative economics and contrarian views. Well, today is the 3rd of September, actually. We're speaking on the 3rd. And Andy, do you know what the 3rd of September is historically?
Geez, you stumped me, Mario. I have no idea. And by the way, it's very nice to see you, brother.
Nice to see you again, too. Well, actually, it was the day Britain and France declared war on Germany, 2 days after Germany invaded Poland. And I wasn't going to talk about this, but I just saw it pop up somewhere. And the reason I bring it up is because there's so much going on, not just in the metals with the bond market, but also geopolitically. We recently saw this not BRICS, but Shanghai Cooperation Organization Summit, and even India was there. And then yesterday you had Xi and his big military parade. So my first question to you is, yeah, what do you see here geopolitically? And I'm not saying I expect a world war, but it looks like this BRICS reset, which is something you've spoken about quite a bit in the last year or two. It seems like it's accelerating, and it's probably one of the drivers for the precious metals market.
100%, Mario. I mean, the Shanghai Cooperation Organization is something I've talked a lot about as well. They're the largest regional military and financial organization on the planet. The way that they are presenting this, at least Xi, Modi, and Putin are presenting it, is that they're all partners, not rivals. But the Shanghai Cooperation Organization, in and of itself, is 41% of global population and 34% of GDP, 24% of the world's land mass. It's a big deal. And I think that you're looking at, Trump, I think, overplaying his hand with India, pushing them right into this this group by imposing 50% tariffs. And, India hosts it next year, the BRICS meeting. I think that they are reaffirming peace on their borders. You saw meetings between Xi and Modi and mutual cooperation. And I think it's a misstep under Trump. There are a lot of things happening right now, but one of the things that I think when we talk about the BRICS that is most, how do I say this? I think most significant is the further development of their bridge technology. Now, it's been known by most as Mbridge, right? The BIS, the reason we haven't heard much of anything, Mario, I believe, is that the BIS pulled what amounted to espionage at the 12th hour to the BRICS nations when they, for the previous 4 years, through their BRICS Innovation Hub, or excuse me, the BIS Innovation Hub, Bank of International Settlements Innovation Hub, they came out at the 12th hour after for 4 years developing the technology with China, which is largely Chinese technology, China, Hong Kong, Thailand, UAE, and then Saudi Arabia becomes the fifth full member of Mbridge. And literally at the last minute before the meeting in Kazan, you get the BIS Augustus Carstens, who has since, I think, been replaced by someone else as his tenure ended, but he was the acting, I guess, the general manager, the head of the BIS. He said, we can't be involved, the BIS can't, with technology that would allow any country to sidestep Western sanctions, as if he was just realizing for the very first time that Russia was the Arab BRICS. So everything went very quiet for a while. We fast forward to an announcement that we saw about 6 weeks ago, and I don't think you and I have talked about this, whereby you had China come out and say, we've rebranded this technology called the renminbi cross-border payment system, or the bridge. And for our first connection with this technology, we've connected 11 Asian countries and 5 Middle Eastern countries. The 11 Asian countries, ASEAN, are all the countries in Southeast Asia, and they amount to 35% of global GDP. And two things subsequently have happened. Now, forget about the 5 Middle Eastern countries that are adding on to it. You're talking over 45% of global GDP just in those countries. This technology is not compatible with the dollar, the euro, or the pound, i.e. the SWIFT system. It settles in 7 seconds instead of the 3 to 5 days that SWIFT takes at a 98% reduction in fees, but it's free from SWIFT interference. Two things have happened subsequently. One, Sergei Lavrov, the Russian foreign minister, came out and said, we're going to offer this technology not just to the BRICS countries, but we're opening it up to the world, except it is not going to be opened up or compatible with the dollar, the pound, or the euro. So in other words, they're opening it up to everyone else but us in the West. And they're starting with the Belt Road Initiative, which is 75% of human population right now as it is, 50% of global GDP. So you add in this technology to the BRICS, the Belt Road, the Shanghai Cooperation Organization, and the Eurasian Economic Union, you're talking 90% of human population who will have the ability to transact outside of SWIFT, settle in 7 seconds, and at a 98% reduction in fees. The second thing that came up was a statement or an admission, or it was in Reuters, and they said the Asian countries now represent China's largest trading partner by far. And they are double the size, about 800 million people, of the United States, 800 million people. And they are now China's largest trading partner by far. And the United States has dropped to number 3. So you put it all together, you have a system that is growing, that is expanding, that is cooperative, and that is keeping the West out. And the West keeps overplaying their hands, we do, by doing things like imposing 50% tariffs on our allies like India. And that, I think, is going to have negative effects and ramifications that I don't think people quite understand yet. This is the acceleration, this growing bridge. And the last piece I would add to that is that now you have China coming out and saying, and here's another piece, we are going to internationalize our yuan. And by doing so, gold is now immediately convertible. Yuan is now immediately convertible into gold right now without having to switch into dollars. They just made this announcement a few months ago in the Shanghai Metals Exchange. And you can take delivery in the new facility that just was completed in Hong Kong. So if you are Saudi Arabia, you sell your oil to China for the yuan, you can immediately convert it into gold on the Shanghai Metals Exchange and their new facility in Hong Kong. But gets better than that. The next facility that they are building to expand the infrastructure for settlement is, you guessed it, in Saudi Arabia. It's under construction now. And their intent is to build this multi-jurisdictional system of vaulting throughout the Belt Road, throughout Asia, Africa, and a little bit in Europe to facilitate settlement. So all of these countries that will trade local currencies back and forth, you keep hearing local currencies. They'll trade their local currencies back and forth over the Mbridge network, settle imbalances in gold, and take delivery through multi-jurisdictional vaults. Perhaps they sprinkle gold, each country, in all of the vaults around the system. And you see vaults springing up in Singapore, in Moscow, in St. Petersburg, in Dubai, the new BRICS facilities that will be built. All of this will be the skeletal system of this new settlement system that they are proposing. Now, we once talked about it as the unit. The unit is what Dilma Rousseff, the former president of Brazil and the head of the BRICS New Development Bank, said they had agreed upon in principle. I believe they have kind of shelved that until Trump is gone. And instead, China's taking the lead and saying it's the process of internationalizing the yuan. Instead of throwing the BRICS common settlement currency in their face, which they've agreed upon in principle, in Trump's face, China's just calling it internationalizing the yuan. But it's the exact same thing. Trade in local currencies, not compatible with SWIFT, settle imbalances in gold. It's virtually the same system that they have in place. That the unit was 60% BRICS plus currencies, 40% gold, deliverable upon request through a series of vaults. I would argue that this is exactly what they are doing, setting the stage for them to just shuffle the unit right in when the time is right. But yes, the BRICS are growing, and to underestimate it is a critical mistake at this juncture, I think.
Yes, and you spoke about gold there, and I forgot to say Andy Schectman is the founder and president of Miles Franklin, one of the largest precious metals dealer in the U.S. And one of our long-term affiliates. Andy, can you just tell the viewers quickly how they can get in touch with you, and then we'll proceed with the.
Yeah, I mean, the best way to get in touch with us, Mario, because of the way we do things, and I have a lot of reasons for it, is to send an email to info@milesfranklin.com, INFO at milesfranklin.com. Let us know that you saw us on this video and ask any questions, or our price sheet, which we update twice a week, 3 times a week. It will be as competitive or more so than anyone in North America. If you find better prices, please let us know. We will do our best to match it or beat it. Info at Miles Franklin. Let us know that Mario, you saw us on, saw me on Mario's show, and any questions you have, nothing off limits, and we'll make sure that we get that out to you promptly by email. We'll contact you if you want, or we won't if you don't. Check your spam if you don't get a reply quickly. Sometimes a very few emails will get flagged by a corporate server going into spam. So that's the best way, Mario. Of course, we do have our own YouTube channel, which you've been on, which is Miles Franklin Media. Sorry, this little guy keeps jumping up on my table. That's why I'm putting him down every second. Info at Miles Franklin Media on YouTube, and milesfranklin.com is our website.
Yeah, I would add as well that I have a link in the description. It's a landing page to Miles Franklin website. And continuing with gold, Andy, could you explain to the viewers how important it is, or how negative it is for the dollar, for the whole Western financial system, that BRICS are gonna base or have the cornerstone of their trading system is going to be gold, and why that is affecting everything these days, not just the dollar and the gold price, but bonds and interest rates.
Yeah, because there is no more demand, since there is no more organic demand or a waning organic demand for the U.S. Treasury. Gold will not replace the dollar. Gold will replace what stands behind the dollar, the Treasury. And I think when you look at the price of gold, which has doubled the performance of the 10-year Treasury over the past 25 years, with no counterparty risk, think of sanctioning against the Russian $5 billion in Forex reserves, or in U.S. Treasuries, rather. It's a big deal. It's a very big deal. And, the gold is an asset that is not simultaneously someone else's liability, and it's outperforming the heck out of the bond market. Look at, like, for example, last year, gold was up 40%. The U.S. Treasury was up 4.5, 10-year. Look at this year. Halfway through the year, that Treasury's up 2.5%, call it. And it's not even quite that much, but let's call it that. The dollar's down 11, so you're negative 8.5%. Gold's up 40% again. So it's a situation where not only is it outperforming, it has no counterparty risk, which is the big deal. And it is acting, I believe, it is acting as the cornerstone to a new system. And you're seeing all of these countries embrace it in lieu of treasuries. Um, I think it's a very big deal. I think it's a big deal for the treasury market, for the dollar, for this new system. And it's one that inspires confidence and trust rather than trusting a insolvent, broke country that is going around throwing sanctions and tariffs upon people or countries. I think much of the world has had it. It's one thing to do that and have your house in order. We are broken, we are insolvent. And after what we've gone through the last 4 years previous to this administration, with lawlessness and open borders and judicial system questioning if it's two-tiered or not, election interference or not, immigration, all of the things that we've seen that I don't need to rehash, the world is tired of it. And instead of extending the olive branch, it's the stick. And when you talk about, should we be doing this with tariffs? Look, being the world reserve currency, Mario, has given us an exorbitant privilege by having the world take our or sell us their products for our dollars and expecting them to put the reserves in treasuries has kept asset prices in this country high. It has kept goods that we purchase at Walmart low. This is our standard of living has been really fostered by the good graces of our foreign creditors. And things are changing now. So you got to wonder, this is Triffin's dilemma. If the world takes our dollars that we print out of thin air for the goods that they create with effort and sweat, and then as a result, putting excess reserves in treasuries keeps our standard of living high, our asset prices high, our interest rates low, our goods cheap, isn't that really the trade-off? And we say it's not fair, but is it really not fair? I think we should be careful what we wish for. And if I had to guess, the days of the dollar being the singular world reserve currency are coming to an end very quickly.
I was listening to Bert Doman. He's an older gentleman. He manages a fund called Wellington. And he was noting that if you add China, Russia, and India, their population is 34% of the world, and the US population is 4%. And he said something really that should concern Americans. He said that yeah, they could very well stop not just well, they could stop sending stuff to the US, selling to the US, because aside from those three countries being cooperating and being able to sell to each other, they've got the BRICS as well, the other BRICS countries. And if you look at all the products in the US and even here in the UK, most of them are made in those countries. And we could end up with empty shelves. And I don't think the Trump administration has thought about that. So, yeah,
No, and look at the latest entry into the BRICS, Vietnam. So not only do you have the hub of manufacturing with China and Vietnam and countries like that, you have the wealth of the world's natural resources. Indonesia has just joined. They have the world's largest nickel deposit. All of the countries that are interested and or have already applied to or been admitted to the BRICS are resource rich or strategically located in terms of trade routes, and underdeveloped in many cases. So this is a deal where this is all about revaluing what is important and what is considered an asset, what is considered strategic. So these countries, I think, would rather own gold and silver and rare earths and copper and than they would U.S. treasuries, which have underperformed, which can be inflated, which can be sanctioned, and are administered by a government that one would argue, if you were around the world, maybe is not aligned with their goals any longer. So, yeah, I think the biggest mistake that the people in the United States are making is underestimating and putting too much faith and credit in the U.S. system. We've become net importers of gold. since November. Well over 100 billion has come in that we know of, and probably a whole lot more that we don't. Things are changing. Gold's at 35, almost 36. It's $3,600 for God's sakes, and nobody's talking about it. It's the weirdest thing, Mario. If you would have told me, I remember, I've been doing this for 36 years, almost 35, and I remember when gold finally broke through $400. What a big deal it was. You probably remember that too.
I do, I do.
And it was a huge deal. And I would, if you would have told me it will be 9 times higher than that someday, Andy, and when it is, no one's talking about it. That's the contrarian indicator. And when I look at contrarian indicators, Mario, I look at here in the United States, all-time high record investment in stock market by mom and pop investors, the retail investors. All-time high margin exposure over $1 trillion, all-time high by mom and pop retail investor. All-time high option exposure by the retail mom and pop. So you have all-time high exposure in the market with leverage and speculation. At the same time, the institutionals have been selling $2 to $4 billion a week of securities since June. Bezos and Zuckerberg dumping. Bezos has sold over $6 billion of Amazon since June. You have all of these insiders that are Stanley Druckenmiller and Buffett, and they're all saying trouble coming. Jamie Dimon, trouble coming. They're all dumping stocks. The insiders are selling as the retail public is all in. At the same time, the retail public has very little exposure to precious metals in the United States, yet the biggest money in the world, who is closest to the information, they're not just the wealthiest or the most well-informed, they are draining the LBMA for sure and fully bringing all this metal back. Now, some of it's leaving COMEX. A lot of it is. A lot of it is stuffed the coffers at COMEX, but who's doing it? Who's bringing in billions of dollars a month worth of gold and silver? If I had to guess, if I had a gun to my head, I would say it's the Treasury under the guise of the Exchange Stabilization Fund, whereby it's American security interests. They don't have to tell Congress what they're doing. They can keep it quiet, at least for a while. And maybe Judy Shelton is right. Maybe they will back the U.S. Treasury with gold on July 4th, 2026. We'll see. She told me that on my show. But if I had to guess what's happening, and maybe you'll think I'm crazy, they passed the Genius Act, the stablecoin bill, which runs the front end of the market. It's all going to be backed by short-term treasury. So you create synthetic demand for the treasury market where there is no more organic demand or a waning organic demand. If Trump really wants to bring back manufacturing, which is a noble endeavor, how the hell do you do it with interest rates that are going to spike? Well, if Judy is right, you peg gold to the back end of the market, 10, 20, 30, and she said even 50 year. On the 50 year, you pay maybe 1% coupon because it's so far out, plus redeemability in gold. And as you go shorter duration, there's no coupon, just redeemability in gold. I asked her, do you think that they will revalue the price of gold? She said, yes. So if you revalue the gold, James Rickard says 24,000. And I'd like to get your opinion on if you think it'll be revalued. His number of 24,000, he takes by dividing, I think, M2 into the gold supply. Mike Maloney says 10,000. Every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. So let's just play this out. If they revalue gold, and Rickard is right, to 24,000, just pick an arbitrary number, that would give the Treasury $6 trillion free and clear to start to work down its debt. And the way that it happens is the president tells the Treasury Secretary, revalue gold. Tell the Fed revalues it. No congressional approval. The Treasury creates gold certificates, gives them to the Fed. The Fed has claim on the cash value of the gold, not the gold. That belongs to the American people. The money is printed out of thin air, which wickedly devalues the dollar. This is the key to it. Stephen Mirren, who just took the vacated spot at the Fed, he's the author of Mar-a-Lago Accord. He wants a devalued dollar to bring back manufacturing. So they revalue gold at a very high number, which benefits every central bank in the world. Not a lot of pushback. It benefits all of them. The price of gold goes way up. Now you can peg it to the Treasury, like Judy says. The act of devaluing the gold and having gold redemption on treasuries with basically zero coupon, no interest rate, allows you to bring back your manufacturing at zero borrowing costs. Yes, you have to pay back the gold down the road, but you bring back manufacturing at a zero coupon, no borrowing costs, and then at the same time you have a massively devalued dollar, which allows you to sell your manufacturing across the globe. I could see them doing this where they say, look, we've screwed things up in a big way. We don't have the demand for the treasury we want anymore. What do we do? Well, we create the Stablecoin Act, the Genius Act, which creates up to 2 trillion a year, according to what's his name, the Treasury Secretary Passent's estimation, to run the government's daily workings by the front end of the curve. The back end is at zero coupon, redeemability in gold. Bring back your manufacturing in a very devalued dollar and sell your way out, grow your way out of this problem. There is no other way but to inflate or hyperinflate or default. Now, the only catch is I could see universal basic income being part of this because it will be very expensive to buy everyday items in that scenario. But I could see the president saying, this is our only hope for our children and our grandchildren. We must bring back our manufacturing. And if we don't do it in the face of a massively devalued dollar, no one's going to buy our stuff. In other words, Vice President Vance summed all this up on White House letterhead, Mario. He said, Trippen's dilemma is such that being the world reserve currency right now is not a good deal for us at all. Our hollowed out manufacturing base is not getting any better. AI is going to kneecap a whole bunch of jobs. He said Trippen's dilemma is such that maybe it's just not a good deal for us anymore. If I had to guess, my feeling is that they are doing this intentionally. Devalue the dollar, revalue gold, peg it to the back end of the market with virtually zero interest rates to bring back manufacturing and sell our way out of this product because as it is right now, we cannot produce our way out. And as Richard Russell, my mentor, God rest his soul, said to me 15 years ago, Andy, the Fed's trapped. They either inflate or they die. This is option three, soft default on the dollar in an effort to bring back manufacturing through the bond market, which is pegged to gold because it doesn't have any demand. And the running of the country, the funding of the government's daily uses would be through the Genius Act, the Stablecoin Act, which every corporation on the globe that is going to trade in dollars will issue stablecoins, which will all be backed one-to-one by U.S. treasuries. What say you? Am I crazy? Am I on something or maybe even potentially onto something? As a former bond trader, I would love your opinion.
So before we proceed further with the interview, I just want to give a shout out to Dirty Man Safe. So with traditional safes, their so-called advantage is that criminals can't break into them. But Dirty Man Safe is different. Its advantage is that it's undetectable, so they can't even try to break into it. And that's only one of the many features of Dirty Man Safe. They provide 3 different sizes, and you can bury your gold coins, silver coins, bars, important documents, jewelry, and anything that's valuable for you. So yeah, Dirty Man Safe is affordable, convenient, provides you peace of mind, confidentiality, and sustainability. So if you want to find out more, there's a link below in the description. It will take you to a landing page. And if you use that link, you get 10% off if you were to decide to buy a Dirty Man Safe. And they ship it to Europe as well, not just the United States. Yeah, I've had Judy on my channel too, and I've read her book, and it's an interesting concept. And she talks about backing 5-year bonds, also maybe a 50-year, and doing the 50-year at the anniversary, 250th anniversary next year of independence. And the bonds would be they would be pegged to gold. So if the gold price went up, it would help the value of the bond, and so it would force the government to look after its finances as well.
Right. The more
But yeah,
irresponsible we are, the
yeah,
higher the
yeah.
price of gold goes.
Yeah, the other thing though, like this 24,000 figure, and you can pick, I guess, any figure. You said it creates 6 trillion in cash. Couldn't that be used as well to pay off, let's say, buy all the debt that the Fed holds, the Treasury?
Yes.
So you could retire that debt.
Yes, that's what they would do.
Yeah,
Pay down the debt? Absolutely.
yeah, yeah. No, I mean, I've spoken to other people about this. It's possible. Back in the 70s, they revalued from 35 to 38 in 72, and then they had to revalue again in 73 to 42.22, which is the level now.
Do you know what the name of the account is where gold is held on the balance sheet?
Yeah, I forgot now, but
You can't make it up. You
yeah,
can't make it up. It's held on the balance sheet in the gold revaluation account. That's the name of
yeah,
it.
gold revaluation account. Yeah, I think the Federal Reserve Board, there's a guy who issued an article at the beginning of
Recently.
yeah,
Yeah,
beginning of August about it. So they're definitely thinking of it. And the thing that it would do, Andy, even if they revalued it to 3,500, gold would go through the roof because it would be a new floor for gold, the three and a half.
that's right.
So 24 would be, like you said, they might need some kind of UBI because it would totally decimate the value of the dollar, I think. But it would help export stuff. But
And how else do you grow your way out of the problem? In other words, I think they don't want to be the world reserve currency anymore. And that's why you keep hearing local currency, local currency, local currency, local currency. This country does its best with its back against the wall, and the only way that we're going to do that is to become the epicenter of production and growth, not the way that we're going with AI coming 60% of America with no college education. We're in big trouble. And
yeah,
so it's his duty, I think, to do this for our children and our grandchildren. There is no pleasant way of doing it. But Triffin's dilemma says because we can't give the world enough dollars alone just through trade, that countries have to sell their currency to buy ours, which creates ours is artificially strong, their currency is artificially weak. And so the act of sending your manufacturing to countries with weak currencies, well, that makes sense. It's very profitable. Those days are over, arguably,
yeah.
at least in my opinion.
One question I wanted to ask you. You said that you'd bet that it's the Treasury bringing the gold back into COMEX, and I kind of agree with you. Do you think it's because they leased out all that gold that they're supposed to have, so they need to bring it in before they revalue it?
I
Or,
think that's part
or
of it.
maybe they're
And
adding on to it?
they're adding. I think they're adding because I think someone got in Trump's ear because we become net importers since November, since the election, not since the inauguration, but the election. Someone got in his ear and said, look, the BRICS countries, well, they are massively accumulating precious metals and not just precious metals. The Chinese bought the London Metals Exchange, so which are the base metals. The Belt Road is all about aligning with countries that are very resource rich and underdeveloped. It's all about resources. And so I think someone got in his ear and said, if we don't do this, this country's dead in the water. And I think that it's not just about gold. They just reclassified silver as a critical mineral and platinum as a critical mineral. So they understand that gold and silver and platinum are probably, and all of these assets are probably worth a whole hell of a lot more than the currency that is being used to purchase them. And I think that's what they are doing. But they lied about the intent. Everyone said, oh, it's tariffs, it's tariffs, it's arbitrage. Bullshit, it's tariffs and arbitrage. That's not what it is. That's the ruse to get it back without everyone saying, you're reshoring, you're not going to give it back up. This is strategic. And I think that's what it ultimately comes down to at some point, Mario, is that all of, the UK is in the same pickle that we are. I saw a report that the UK someone in the UK wrote a year or two ago, said we are screwed because we've given up so much, all of our natural resources that we need. We're reliant upon other countries like China. And that's kind of what the realization is that I think the US understands. And all of this under the guise of Trump tariffs, I think is much deeper than that. And but that was the cover. so that they could bring back as much as they could without the world catching on and maybe crowding them out of their own aspirations.
Yeah, I don't want to keep you too long. I know you're going to play golf, but I wanted to ask you about
I
silver.
love being here. Don't worry about it, brother. I'm good with you.
Yeah, I wanted to ask you about silver because I think you said recently or a few months ago that it's the most undervalued asset out there. And as we speak here, September 3rd, we're trading above 41 actually in the spot price. We're at 41.10, so it's like a 14-year high. How do you see silver going forward?
I'm
Uh,
going to look at the
on
futures
it,
price here.
yeah, on its own and relative to gold.
Here's the futures price on the CME. Do you see that? That's the
Yeah,
that's the
yeah, yeah,
COMEX.
yeah.
The futures is 41.88 right now. We've seen just in the month of September 42 million ounces delivered into COMEX. 42 million ounces, 1,308 tons delivered into COMEX. That's massive amount in a non-delivery month. You got silver at a 14-year high. You got China flying around the world as the second largest producer of it in the world, buying up all the doré and concentrate from Latin America, in particular Peru and Mexico. You have Russia, who has openly made it a part of their strategic stockpile, the first government to openly do that. You have India, who's bought over 800 million ounces in the last 6 years. And now you have Saudi Arabia taking a massive position in SLV. Now, I hate SLV, but if you look at it closely, they bought enough to where they could demand delivery, which they probably will. I look at silver again as being the word, when I think of silver, I think of the word asymmetrical, lowest downside, highest upside. Um, and it's been suppressed for a very long time. Suppression or manipulation only works by pushing it in the direction that it is going over time. And the US used to be able to do this. The West used to be able to do this. The UK, the LBMA, the COMEX in the United States, all the Western countries were able to do it for whatever reason, whether it be the military industrial complex, as I argue for silver, or Gibson's paradox with gold, the inverse relationship between real interest rates and gold. Those things work when you're not challenged. But the countries in the global south are now wealthy, coordinated, motivated, and sophisticated, and they're using it against us. And I always point to what the administrator of the BRICS grain exchange said a year ago when and it's being developed right now. And he said, look, we produce and consume more grain than they do in the West, but that will change. Oh, he said, but we can't control the price. It's controlled on COMEX. But that will change when with the development of this new grain exchange, whereby the demand that comes out of BRICS, that's going to change things. Knock that off. So I would simply say to you that this is something that I think has been exposed. The suppression of gold and silver, I think, has been exposed, and the countries around the world are using it against us. And maybe this is the understanding and the realization that this administration has come to. You're seeing the price slowly move up, not too fast, not too slow, but it's outperforming everyone's expectations all of a sudden after underperforming and underwhelming for a very long time, so much so that most of the public won't even notice it. And that's the crazy thing. They aren't noticing it, but someone is. Who has the ability to bring into the COMEX 42 million ounces in the month of September, the delivery contracts in just the first few days? So this needs to be thought about. These people that are doing this, whoever they are, the level of sophistication and wealth is off the charts to be able to do that. And then the people who have that kind of money, they don't do things just for the hell of it. They are closest to the information. Look at billionaires like David Bateman, who's bought, several hundred million worth of silver. I don't know the exact figure, but he's a billionaire who gets it. People with the inside track to the information, I would argue, are the ones that are flooding COMEX. Whatever, and a lot of it's leaving COMEX. Not all of it, but a lot of it. And so whoever's doing this, I would argue, um, they know what they're doing. And I think this is the key to it all. It's not listening to the noise, it's looking what the biggest money in the world is doing. They don't get to that level of wealth and sophistication, you know, by chance. And the people that they associate with are at levels of information that we all wish we knew. To me, this is the interesting thing. All of this metal coming in to the COMEX, yet zero acknowledgement of it by the mainstream. No one's talking about who's bringing in what amounts to well over 100 billion worth of gold and silver since the beginning of the year. Who and why isn't it talked about at all? And then you got guys like Vince Lancy, who's as smart as they come, saying 85% of the metal that's coming into the world's exchanges is not being reported to the IMF. In other words, a lot of it's coming in, maybe not to the COMEX, that's coming into private vaults, not being reported to the IMF. This is a game of let's get as much as we can before the world catches on, would be my opinion.
Yeah, it seems to be the reverse of what I read about in history back in the 30s before Roosevelt made
Everything was leaving.
gold illegal. A few months before, all the wealthy Americans sent their gold to Switzerland because they
That's right. And that's it right there.
yeah,
That's
that's right.
Roosevelt and the executive order and the coins that they would have confiscated. You're right. They all, in fact, one of my very good friends, who unfortunately you didn't meet when you were down here in Florida, is one of the largest importers of coins in the world from European central banks. Where you're right, all of the gold, the people in the know, the insiders, again, the information, right? It's like American football. When you're in a huddle, the offense knows the play, the defense has to react to it. So it's much easier for the offense in theory because they know the play. And that's exactly what all of Roosevelt's buddies did. Oh, you just happen to send all your gold by steamship to Switzerland and Liechtenstein and the UK and all of these places into banks, into safe deposit boxes just for the hell of it. And it just happened to be a month before gold was confiscated. Yeah, right. And it's the same thing here. So you just happen to be importing all of this gold and silver as the price keeps going, but slow enough to not cause any attention. Like, where's the mainstream? Where are they? They're asleep and they're fully invested in equities, largest margin exposure, largest option exposure, as the insiders are leaving at a 7-to-1 clip the equity market, selling 2 to 4 billion a week since June 1st, and all the big money like Bezos and Zuckerberg and Buffett, 500 billion in cash for Buffett, really? So the insiders are leaving the equity market. The public is all in on the equity market. The insiders are massively accumulating metals, and the public doesn't have any. What could possibly go wrong? And I think that's what I take away. Don't do as I say, do as I do. And that would be my advice. Do as these people are doing. Don't do as they say. Um, I don't know. And September traditionally is the worst month out of the year for equities, September and October. So I don't know. I think we're heading into a very interesting fall for sure.
Great, Andy. We need to talk again, and if you want as well, I can come on your channel.
I
And
would love you. I don't think people know. I think you're one of the smartest, nicest guys I've met in 36 years. I consider you my friend. You've stayed in my home. You've met my family. You met my friends. There's very few people in this industry that I hold in the same regard as you, Mario. I want that to be very clear. And I mean that sincerely as, business aside, you're a good dude and you're smart as hell. And I'm glad that people listen to you and you have so many people following you and I follow you. And it's an honor to be here and I would like to do it again. And I'll have you on the show. I'll have Michelle interview you. It's something we should do on a regular basis.
great. Take care, Andy.
You stay well, my man.
Thank you.